Hey everyone, welcome back. What a busy day, right? With the CPI number coming out tomorrow, everybody is coming out and giving their prediction, and also the market is not able to decide where to go. Tesla all the way touching 760, 766, coming down to around 724. Right now is at 718. Come on. I mean, the ups and downs is just crazy in this market. And nobody knows where we are going to go or where we are going to end up with. So when the CPI data comes out tomorrow, there are a few things that I've mentioned in my previous video that I'm looking for, the three sectors that could define what the CPI data looks. But is market ready to accept the CPI data or the truth that the CPI data is going to reveal? Because everybody is talking about how inflation has topped, inflation has peaked, and now from here on, we are going to see low inflation. That's what the expectation is of the market. What if, and there's a question, what if, and I have a reason behind it. What if the inflation comes out hotter than we were expecting? The core inflation is definitely going to be lower, but the headline inflation, the gasoline prices, the fuel prices, everything is surging. I mean, we had the big increase in May as compared to April in fuel prices. So if that inflation comes out in double digits, somebody saying could touch like 10% or whatever, are we going to really bear the brunt of the market? And how are we going to bear the brunt of the market? Where could we see S&P touch? Where could we see our favorite stock go down? That's why this update that I just received, I was reading an article on Bloomberg. They talked about few key points, which some of them market has already priced in, some of them market has not priced in. For example, I have heard many analysts on CNBC come and talk about that they expect the Fed to raise 50 basis point in June, 50 basis point in July, and that's about it. But what if the CPI data comes bad, where Fed will come out and they will continue increasing till September of this year, or they will go all through the year? What happens at that time? Have we priced all of those in? So let's do this. I'm going to share this article that I was reading, and we are going to go over together about what they're talking about here and what to expect. Over here it says US preview May CPI to boost chances of 50 basis point September hike. Okay, it says May CPI report, which is likely to show we are still months away from clear and convincing inflation indications that inflation is slowing, will step up pressure on the Fed to continue rising rates by 50 basis point at each of the next few meetings, despite signs of economy is cooling. Yeah, supply chain issues are getting better because people are not buying this stuff. Of course, that's a possibility right there. But if the CPI comes hot, the Fed has to become more hawkish and have to raise more interest rate. Even though it's just 1 month of data, the outsized monthly gain in the May CPI will keep the inflation close to the March peak of 8.5% and increase the chances that the new peak will be set in September. Okay, so this is the new peak they're saying. Oh, there's another news here. Okay, I'll cover that in the next video. Okay, so what we expect. The headline consumer prices are set to increase 0.8% monthly versus consensus of 0.7%. Again, that's headline consumer prices, holding at 8.3% year over year in May, as a surge in energy and food cost offsets pockets of moderation in core good prices. The core may rise 0.5% is what their consensus are saying. I think 0.3% is what the increase is going to be, which would be enough to promote deceleration from 6.2% in April to about 5.9%. So core inflation is going to come down. Core inflation is going to touch 5.9% as compared to 6.2%, which was back in April. So there's definitely a big change in core inflation when we are talking about, but the headline inflation is going to keep going up because of the prices of fuel and energy. Okay, gasoline prices will add 0.2 percentage points to the headline again. Pump prices rose about 8.2% in May from the prior month, whereas the BLS's seasonal adjustment factor will anticipate a roughly 3.6% rise. In turn, seasonally adjusted prices will rise about 4.4%. June will see even more upward pressure in the vicinity of 14% gain for gasoline prices on a seasonally adjusted basis based on our early estimate. So June is not looking good for fuel and energy prices. It's going to continue to suffer or struggle where we are right now. Services, including housing, insurance, and travel-related categories, are likely to show price gains on a robust upward trajectory. Okay, next, prices in several Core good categories will likely show signs of moderation following pandemic-fueled demand as consumers rotate towards demand for services. One important exception is used vehicle prices. Our assessment of wholesale prices and industry figures suggest they will continue rising. Now, I just shared in my chips or in my early video about semiconductors, how supply chain is getting better, and all Daimler, BMW, all these car companies and Mercedes are basically coming out and they're saying that they don't have to wait that long for their high-end chip as they were to deal with last year. So there's definitely increasing, and I feel that the auto prices, not because of the chip supply issues, but more because of the labor shortages and also less production, is going to keep up there where they're talking about. With the national average gasoline price pushing $5 per gallon in the early weeks of June, our pre-forecast for the June report is 1% monthly gain. In that case, year-over-year inflation would move up to 8.4%. Okay, 8.4%. Right here, they're talking about 8.3% year over year. It's going to go up in the June report, and it would take a monthly gain of just 0.6% in July for the year over CPI to reach a new peak of 8.6% then. This is what they're saying. If you are thinking that peak is here now, just wait, because if the oil prices or the fuel prices continue to go up, we are going to see that peak in July, not now. So this is going to be really, really interesting to see what the CPI data comes out tomorrow and what they report. Bottom line, although core inflation measure appear to have peaked, this is far from clear for headline CPI. For normal Americans, energy and food prices are necessities that drive their inflation expectation. Okay. So as a consumer, and I'm going to basically coming up as a consumer. Okay. So as a consumer, if you and I, we go to pumps, we go to food prices, we go to restaurant, we go to grocery store shopping and all that. We are seeing the peak now. Well, at least I'm feeling the peak now because I'm driving more because it's summer. I wasn't driving that much in the winter months. I'm going out more because kids are out of school, they want to go, they want to do things. So I'm paying more money, or I'm spending more money as I was spending last month. So I feel that to me, the peak is now, and it's going to get worse. I have 3 business trips and 2 personal trips planned in the next 2 months. And whenever you are traveling and all that, you spend more money as compared to when you're living home, because you're eating all meals out, you're going out, you're doing Uber, you're renting the car, whatever you're doing, wherever you are, you spend more money. So consumers will be spending more money as they go. So this is really interesting because they're saying that yes, core inflation prices have come down, but the consumer is actually feeling we can't live without food, fuel, energy, right? I mean, we have to keep spending money on that. Then on top, this is what their chart is basically. So this is the Bloomberg chart, and they're talking about how in June of 2020, we might see a 0.7% increase. But in July, if we have that increase of 0.6% that I told you in the fuel prices, that's going to push the July or the CPI to 8.6, which is going to be the highest, the peak, what we have seen so far. So this is really interesting that they're saying food, yes, it's less as compared to, but the drop or the energy is going to make up for it. See over here, this energy is this much, but in this graph, the energy is taking a lot because we are using a lot more. The summer is here, right? People are, going out more and doing more things. The contribution to key CPI categories are shown in the chart above, along with Bloomberg economic projection in the next few months. Energy and food dominate. Low inventories of gasoline and other refined product, the high export demand are set to keep energy CPI elevated, with the national average price of retail gasoline near $5 per gallon in June. Consumers will feel the pinch in the summer, and we have already seen signs of paring back spending on gasoline and other energy goods for this year. This is very tricky, and that's why one of our Patreon and Discord member asked that where do you see CPI or where do you see the stock market? And I hate to give that response, but I did. I was like 50-50. Because on one end, core CPI is definitely going to come lower, but the headline CPI is definitely going to come higher. So it's very hard to decide. And look at the stock market, like even if you just look at Tesla stock from 760 to 718 to 720 now, I mean, it has no idea which direction to take. This is CPI gasoline, and this is retail average gasoline price. This is a very interesting chart. Take a look over here. As CPI gasoline started to come down here, and look at this point, right when the CPI was supposed to come down, the gasoline prices went up, and this was all May right here. Okay, so what we are going to get the reading over here, I think the energy and the fuel or the gasoline prices, it will be the highest, or their contribution to the CPI will be the highest than what we have seen. So this is the report that I wanted to kind of quickly talk to you about. And there was another very interesting article that I read which kind of relates to this. So when the numbers come out, okay, there are two sides to this CPI data. One side is where everybody is expecting that we are going to see some core CPI numbers drop down drastically as compared to April, which I'm in the same camp. Yes, it's going to. But I think the fuel and the energy is going to take over the sector of the core, and the headline inflation will be so hot that Fed, wanting or not wanting, they have to keep the hawkish approach, and they might have to add one or two more rate hikes to basically calm the inflation down. And that's going to be really, really bad for stock market in the short term. Remember, the headwinds that we face right now is the short-term headwinds, and we are going to get out of this. And this is the time, if they're saying that we are going to peak in July now, right? I mean, right, so far we heard that it has already peaked. Now this report basically says that we could peak 0.6% increase in the fuel prices, we are heading for a new peak in July. If that happens, stock market has not priced that in, and they will price it in once the CPI data comes out. What is the end or the sum of this whole video is that if you are waiting, myself including, waiting to basically get into the stock, then the next few days will be critical to decide which direction you want to go in. You want to buy, or you want to hold off, or you want to, buy some puts on the stock, short the market, whatever works for you, whatever your trading style is. But I think that this will at least give direction to the market, and the direction to the market is good. It doesn't matter if it's bad direction or good direction, at least we know which direction we are headed, and most of the things will be built into the stock market when we reach to that July number, because stock market has already accepted the worst and has passed the worst. So I hope that we get some direction and some sense tomorrow, because I think it's really, really important and critical for us investors to basically get out of this rut, because this rut is no good for anybody. I hope I provided some value, and if you like the video, then definitely let me know in the comments what are your thoughts about the CPI tomorrow. And of course, I will be watching the CPI report and also doing a follow-up video maybe tomorrow evening, breaking down the CPI data and also telling you about what I did, if I did anything in the stock market tomorrow or for even next week. Thank you so much for tuning in. Until next time, you all have a sparkling day.